Hello and welcome back to The Note. Passive fund managers have long had a bad rap for being passive owners. Everybody knows that they can't sell the stocks they hold while they remain in the index. It's therefore felt that they are passive stewards. They are now fighting back very strongly against that image. My guest today is just in the process of sending out this letter to some 3,000 or so chairmen of companies that he owns. He's the CEO of State Street Global Advisors, Ron O'Hanley. Ron, thank you very much for joining me today.
You're welcome, John. Thank you.
Now, what's the main purpose? What's your main point that you're trying to make to the companies you're investing in by sending them this letter?
Well, John, as you noted, passive owners, in fact, own a significant portion of shares of many companies now. For the major indices, we are the largest owners. And as passive owners, we're in essence permanent capital. So we don't buy or sell based on any other reason other than weight in the index or however the index fund is constructed. As such, we're in essence permanent capital. And that plus the fact that we don't have the usual tool that many investors have is we can't vote with our feet. Right? We can't leave the investment if we don't like it. So as a consequence, we view ourselves as being relatively permanent capital, of having an obligation to make sure that boards and management teams are acting in a way that long-term value will be created for our clients, who are the ultimate owners of these companies and have this long-term interest in it. So the purpose of this letter is quite straightforward. It's to lay out for these companies, their boards and chief executive officers, what we believe is important from a governance perspective in terms of creating long-term value. And for us, putting it in a nutshell, that's effective independent board leadership is what we're seeking.
Now that doesn't necessarily mean splitting CEO and chairman functions, as I understand it.
No.
What do you mean by that phrase?
Yeah, so I'm choosing my words carefully. Effective independent board leadership is different than effective independent board leaders. Leader is a subset of leadership. So what we're looking for in a board is strength, skills, leadership, meaning leadership of the company. Boards are meant to lead the company, not vice versa. They're meant to lead and oversee management. We're looking for leadership when it comes to the long-term strategy. Again, management creates strategy, but it needs to be overseen. We look at boards as actually being typically having a much longer tenure than the actual management team themselves. So seeing that strategy through management team after management team. So it's a series of attributes of which one will be the quality and structure of the leader himself or herself.
Okay. Now, you are long-termist because you have no choice. Unless the company leaves the index, you're stuck with it.
Right.
What does that create? Does that create any tension when you're dealing with what people normally think of when they think of activists, which is hedge funds, guys taking large stakes, putting pressure for particular moves to release value? Do you regard those as short-termist? Are they in any way contrary to what you're trying to achieve?
I think the answer is it depends. Sometimes yes and sometimes no. In many cases, though most activists would be much more short-term than we are, the things that they're pushing for are consistent with the things that we'd like to see. So anytime there's an activist involved, more often than not, the activist is coming to us looking for us to ally with them in terms of voting and those kinds of things. And we will look over what they're doing to the extent to which we believe it undermines long-term value creation, then we won't be part of their vote.
Now, I guess my final question, you yourselves are obviously a very significant block of more or less every company you hold. If you add in the other two big passive players, we're probably talking, for many companies, as much as 20% just between three players. You're not allowed to coordinate directly, obviously. Is there a certain commonality of interest? Does this block of money held in passive managers have some kind of a unified voice or a unified theme?
I think the unified theme is around this notion of permanence, and that because we will own the company forever, or at least as long as it's listed in this index, this idea that what we all are looking out for are avoiding those kinds of actions that are creating short-term value for a few shareholders but undermining long-term value for the permanent shareholders.
Cameron, thank you very much indeed. This is not a topic that's going to go away. Passive management continues to make growing inroads into its overall share of the investment management industry. We are in many ways relying on passive managers to be our stewards for large companies. It's very encouraging indeed that they appear to be taking that role very seriously.